the cheap levels, we're kind of at key trend lines, and almost every time we get here, the crypto market 10 or 20x's from here. So your risk reward is highly favorable, and you've got the shifting macro where we're going from maximum pain in the economy to starting to see the central banks change their course and start adding liquidity back because they've broken the economy. You really should be focused when everybody's scared and everybody's puking their crypto, their ETH and Bitcoin. You should be thinking, now's the time to accumulate it.
Hey guys, welcome back to the channel. Today we have Raoul giving us a market prediction for crypto and how the landscape is looking for the rest of the year. In the midst of the crisis that has seen many cryptocurrencies plummet, Raoul believes the crypto market is nearing its bottom. As crypto asset values continue to tumble, the former Goldman Sachs executive explains why he believes the market is on the cusp of a major shift, despite the fact that crypto is in full panic mode. Powell says that just like past cycles, many cryptocurrencies are going to zero. However, even if Bitcoin prices have fallen to a 2-month low versus the US dollar, 46% of Bitcoin owners are still profiting. It's easily outperformed all other assets over the last decade. The 17 best performing asset classes from 2011 and 2021 were tracked last year, and Bitcoin handily topped the list with a 230% annualized return. The Nasdaq index came in second on the list with a 20% annualized return. Let's check out this interview with Raoul as he tells us what to expect in the crypto market for the rest of the year. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
So why has the price of crypto crashed specifically? And maybe provide some context on how cryptocurrencies historically have moved given the types of inflation or the rate of inflation we're seeing now, given how the stock market is moving now, given the broader context, why we're seeing this crash in crypto.
So crypto is a function of two things: technological adoption and the liquidity that the central banks are providing. Those two things are the key drivers. So if you zoom out of a log chart of crypto that everybody always tells you to do, you can basically see things like Bitcoin go up, just up over time, and up a lot. But it's very volatile. You get these kind of big ups and downs. What drives the big up, and then what drives the ups and downs? The big up is driven by the adoption of technology. There's now 300 million people using cryptocurrencies or investing in cryptocurrencies. It's growing at about 100% a year or so. It's the fastest adoption of any technology the world has ever seen. So people are adopting this twice the speed of the internet. That's why it's been so profitable, but it's also very volatile. And it's very volatile because when the central banks remove liquidity, which they've done in 2013, 2015, and various other points, cryptocurrency collapses because there's less money around for people. Most investors in crypto are actually retail investors, and they dollar cost average. So they put in some of their paycheck every month. Now the issue is if your paycheck's gone down, in purchasing power terms, you have less money to invest. So suddenly, cryptocurrencies are less active, the networks are less active, and the price has gone down. So does that change the long-term picture of the adoption of blockchain technology? Well, when you look at it and you see everybody from Nike to Gucci to Ticketmaster, you name it, all using blockchain technology, it's not going away. We're just in this period where it looks pretty ugly and feels pretty ugly.
Over the last 24 hours, approximately $300 million in long and short positions have been liquidated across cryptocurrency markets. With losses accelerating, many analysts wonder if crypto will overcome market volatility. Retail investors were the driving force behind this movement during the last decade. However, sovereign wealth funds, global financial institutions, businesses, pension offices, governments, and other institutional investors are becoming more aware of the crypto market's potential.
But then if you think of the big financial market participants that we've been waiting for to enter the market, some of them have. So these are the big pension funds and hedge funds and others. They're also struggling from lack of liquidity because their portfolios are going down from what the Federal Reserve are doing, so they have less money to put into crypto. So I spend a lot of time speaking to these big institutions, and they're all ready to get involved, but they just don't have the cash right now, much like we don't have the cash because everybody's feeling the pinch. So if everybody's feeling the pinch, it's not going to drive up the price. But once this situation eases, it'll start driving up the price. Now, there's another piece of magic that happens with crypto, is crypto doesn't do well in inflation, but when the central banks start printing more dollars or euros or pounds or yen or whatever it is, that's called debasement of the currency, quantitative easing. And that is when crypto does really well. So one of the reasons I've been very closely following the prices in crypto recently is because as we start getting a worse and worse economy, we know eventually rate rises will give way to rate cuts. Quantitative tightening will go to quantitative easing, and those conditions are literally perfect for cryptocurrencies. And you can see the markets are trying to test this out now. They've been basing for a while, since June mainly, as they start to watch the economy start slowing down dramatically and expecting the Federal Reserve to change course.
How do you think long-term holders right now should ride out this so-called crypto winter? I know you said, this is not a permanent thing right now. How should long-term holders be thinking about this wave in crypto right now?
Well, there's a piece of magic, and I alluded to it earlier. We know that the adoption is going up, and the adoption of a network drives up price. It's called Metcalfe's law. So here we are at the most oversold levels almost in history of crypto. Yes, the price move has not been as big as it was in earlier stages, but the levels of how oversold it is are enormous. So here we are looking at this saying, okay, it's been driven by the macro, it's been driven by the central banks, liquidity, inflation, and our job is to look forward the next 2 years, 3 years, 5 years, and say, is this current state of affairs going to be permanent or temporary? Well, the history of economies is the business cycle goes up and down. It's cyclical. With the cheap levels, we're kind of at key trend lines, and almost every time we get here, the crypto market 10 or 20x's from here. Now, that's not a guarantee that it does it next time. So your risk reward is highly favorable. And you've got the shifting macro where we're going from maximum pain in the economy to starting to see the central banks change their course and start adding liquidity back because they've broken the economy. So therefore, you really should be focused when everybody's scared and everybody's puking their crypto, their ETH and Bitcoin. You should be thinking, now's the time to accumulate it. When you've got an asset that trends so strongly and is so volatile, these sell-offs are your friend, unless something fundamentally changes with the story. And we don't see that. We don't see it. It's not been banned by every government. People haven't walked away from it. It's the same with the personal computer. It's the same with Amazon. Amazon, when it went public, fell 96%. And then it went up and then fell at 80% and then down and then up and down. And it had the same adoption curve as people adopted the Amazon network. And really, the only person who ever managed to hold on to it was Jeff Bezos. Because everybody else panicked out all of the time. And he became the richest man in the world.
He's doing fine, yeah.
So we saw that China bans it. Market goes down a bit, then nothing happens. India bans it, unbans it, bans it again. Nothing really happens. So it's actually difficult to think what is the existential threat now. Well, the one threat people say is, well, if the global internet is turned off. But again, that's a distributed network, and with Elon Musk's Starlink, it's actually harder to do because these networks of phones and data are now not in sovereign states, they're in space. So it actually becomes really hard to do. So I don't see the existential threat. You can have threats, like the US regulates it, tells everybody Bitcoin is bad, you're not allowed to own it. So I don't see the big existential threat.
Raoul goes on to say that from a macro perspective, the stock market as well as the cryptocurrency market are both on the verge of experiencing a worse recession. Powell believes that the end of the year is when we will experience a proper bounce or bottom based on all the technical indicators he employs. He believes that many people are likely to panic between now and then, but if the central bank reaches the inflationary threshold, Raoul feels the Federal Reserve will have to intervene. Many analysts feel that the current banking system is on the verge of collapse and that the fiat currency world will have to make a major adjustment or else it will ultimately come crashing down. Raoul says he still sees the bull market ahead, but until we see what happens in the crypto market in the next 30 days, we'll have to wait and see. What do you think about Raoul Pal's interview on the crypto market? Comment down below. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.